How does the stock market work? So this is a market with supply and demand. The supply of shares is here now indicated with a vertical supply curve, and demand for shares is dependent on the demand price. So the idea is if the price of a share is high, then demand is low. If the price of a share is low, then demand is high. The intersection of these two curves, the supply and the demand curve, yields the price of the share, let's say P star. If a company issues new shares, that means that the supply curve shifts to the right, then for a given demand, the price of the share goes down. The most important insight from the stock market is that the demand for shares is driven by profit expectations. So if profit expectations are high, then we will see more demand for shares. If profit expectations are disappointed, then we will see less demand for shares, and more demand has the consequence that the price of the share goes up. Less demand has the consequence that the price of the share goes down. Maybe the most impressive example in 2022 is Facebook Metaverse. So Zuckerberg, the CEO and founder of Facebook Metaverse, has sold a virtual reality story to the market, and this virtual reality story crashed. So that led to a loss of market capitalization of Metaverse of 75%. So this is an incredible amount, a loss of 75%. So the market capitalization has gone down from about $1,000 billion to $250 billion. Want to read that in detail? So referring to The Economist, 5th of November 22. So Meta's share price was battered for several days after the company revealed another big loss at the division developing the metaverse, and warned of further losses to come. With its share price now down by 75% since the start of the year, some big investors are reportedly furious at Meta's emphasis on building worlds of virtual reality, but as Mark Zuckerberg has majority control, there's little they can do. That's a nice example for the stock market in 2022.